Hey traders, welcome back to this week's weekly Forex forecast. Last week we saw more turbulence in the Forex markets and in equity markets, big volatility swings, but it was another winning week in the books in the GMT members area. Why was that? Because again, we focused specifically on risk-off trades, risk-off setups. So the only setups that I took and posted to members last week were in the direction of risk-off, and I was also very selective. The worst thing you can do in very volatile market conditions is overtrade. Patience is absolutely key, and you want to be very selective and very specific about the setups that you're taking. Really only the best setups in the direction of risk off. So that is the plan once again coming into this week. It was the plan last week, and what you'll see in today's video is the setups and the markets that I liked last week, which worked really, really well, are also primarily the same markets coming into this week that I'm interested in trading. So if we have a quick look at the dollar in the 4-hour time frame, I've zoomed out so you can see some of the analytics here in HedgeDash, because this is what is important going into this week. So when we go through the portfolio selection and we look at the specific markets that I think, and based on the quantitative data, suggest are going to be the best markets to trade next week, you know, to the long side or the short side. Something to note is that the moves in euro dollar to the upside were extreme, and it means that going into this week, any further upside is likely going to struggle. We could take out the highs, but this is a market that needs to pause and correct on a rolling daily basis and potentially on a rolling weekly basis. Now, if that is the case, that suggests, you know, a pause or a correction in euro dollar to the upside over the next not just a few days, but potentially a few weeks. So what does that mean? Why is that so important? Well, euro dollar is really just the inverse of the dollar index. And this means that we're most likely seeing in the US dollar a capitulation low. In other words, the sell-off was so strong, so extreme that it has to at least pause and correct, if not form a major bottom. But it's a little bit too early to call for a major bottom, but certainly the quantitative data is suggesting we need to pause and correct higher in the dollar over the next few days and potentially few weeks. So if that's the case, when we go into the portfolio selection, I'm going to be avoiding US dollar short positions, even though the US dollar is weak. It's weak, but it's actually so weak now that shorting it is not a fantastic idea, quantitatively speaking. If we look at euro dollar, if we do get one more push up and we start to take out the upper bound, so this is overbought, extremely overbought on a rolling daily basis, overbought, extremely overbought on a rolling weekly basis, and then we have the rolling monthly sentiment up here. But these levels are intra-week, so this is during the week. So you could think about, you know, the weekly candle essentially coming up. Euro dollar becomes overbought above the 1.1548. So extremely overbought on a rolling weekly basis and extremely overbought on an intra-week basis would be above the 1.1766. Most of you know that, but for anybody new watching the video, those are the levels that we're going to be looking at and going through. And these are the levels that I take all of the setups from with GMT members in real time. So if we do get a push up in euro dollar above the 1.15648, it's not the best setup because this is quite a strong market, but you could potentially start to look for bearish reversal patterns above that area. And I would imagine next week, there's a very good chance that they will pause and reverse lower, at least for a couple of days, if not a couple of weeks. We also have the ECB on Thursday, and they're expected to cut rates. So any rally into the ECB and then interest rate cut on Thursday, it would not surprise me if that was the setup, and that marked a pretty significant top in euro dollar, again, at least for a few days, if not for a few weeks. Okay, so moving on to portfolio selection, and you can see the markets are quantitatively pretty much setting up exactly as you would expect in risk off. The Swiss franc is still the #1 currency. This was, you know, something we were looking at to the long side last week. We had a huge explosive move to the upside in the franc. We were looking at euro longs last week, huge explosive move to the upside in the euro pairs. And we're also looking at the Japanese yen. So the Japanese yen being the most risk-off currency, but because of all the BOJ printing recently, we've seen at the moment, because things haven't really completely collapsed in the US stock market, yes, we saw a pretty significant sell-off, but we're not seeing an absolutely huge flight to safety. We're kind of seeing a medium flight to safety. We're seeing money go into the Swiss franc and the euro, but in a real, you know, significant, serious risk off, you would likely see the Swiss franc and the euro both actually going down against the yen. But for the time being, the Japanese yen is still my third favorite currency to the upside. And if things get really hairy in the stock market, then I would actually expect the yen to even start to outperform the other two. So to the short side next week, again, this is fairly straightforward, but not as straightforward, because the Aussie dollar is absolutely my favorite short heading into next week. If I get the opportunity to short the Aussie dollar, especially versus the Swiss franc, the euro, and the Japanese yen, I'm going to take that setup. Now, the US dollar is quantitatively the second best short. However, we just looked at the fact that the US dollar it's had such a big liquidation that it almost certainly needs to pause and correct. And I wouldn't be surprised to see certainly a near-term bottom, but I wouldn't actually be surprised to see a major bottom. Now, again, as I said, I'm not calling that. It's a little bit too early. I want to see how it plays out and how it shakes out. If it starts to V-bottom, then I might look and say, okay, this looks more like a major bottom. But at least we know it needs to almost certainly pause, move sideways, or even correct higher. So for that reason, I'm not looking at shorting the US dollar next week. In fact, euro dollar, we looked at to the short side. Not the best one because the euro is quite strong. I don't really favor shorting euro dollar. Again, you could look at it because it's so overbought to the upside. But I would much rather, if I was going to step in and buy the dollar, buy the dollar versus the Aussie. So Aussie dollar short, pound dollar short, New Zealand dollar short, right? They would be the better shorts to take versus the US dollar than the euro. But even the euro, looks like it needs to pause and correct lower. So going to leave the US dollar for next week. The pound is my number 2 short. So I am going to be looking at pound yen, euro pound to the upside, and pound franc to the downside. And we're going to look at that in today's video. And then the third one on my list is the New Zealand dollar. So, Canada has been holding up pretty well. We do have the BOC next week. On Wednesday, interest rate cuts. We've got the interest rate decision out of Canada. So out of those two, if I can, I prefer to trade the one which doesn't have the interest rate decision, doesn't have that kind of volatility attached to it. So I do like the Aussie primarily because we're seeing, don't forget, that trade war with China, between China and the US. It's going to be damaging also to the Chinese economy as we're seeing tariffs go up and China are retaliating. And of course, the Australian dollar, China is the largest importer of Australian commodities. So if the Chinese economy slows down, this has a major knock-on effect to the Australian economy, which slows down. If the Australian economy slows down, they're going to, on a forward-looking basis, this is bearish for the Aussie dollar. So Australian dollar as a short is one of my top themes next week. So to summarize then, Aussie shorts primarily, but also the pound, the New Zealand versus the Swiss franc, versus the euro and versus the Japanese yen. Those are the main themes and pairs that I'm going to be looking at next week and we're going to look at in today's video. Okay, so kicking off the watch list, as always, with crude oil. Now, crude oil is still a short or do nothing for me, but I've zoomed out a little bit here again, showing you some of the analytics in Hedge Dash outside of the chart, because this is exactly what I was talking about in euro dollar coming up next week. We saw this not too long ago, in fact, only over the last few days or last 3 to 5 days in crude oil. So we're talking previously about this major breakout of this descending triangle. There is a downward target on this, about 45, maybe $40 a barrel, something like that. So we've still got quite a way to go if we are going to achieve the target of this major breakout. Now, if I zoom in here, I want to show you something. We can see, of course, the levels. I'm on the daily time horizon. So these are the levels for this week where we become overbought. So in the sell zone between these two levels, or oversold in the buy zone between these two levels. But if I'm only short, the buy zone for me would be profit taking, right? So I've sold something, it goes into the buy zone, and then I buy it back. I can't buy, the dip on this because this is a short or do nothing. But what I want to show you is this. On the 8th of this month, we had the reading on a rolling daily basis that this market was extremely oversold. So it takes into account multiple candles. So it's a multi-candle reading. And on this day right here, you see this? April the 8th, we got this reading. So when we got this reading in Hedge Dash, all we could see was this. We had this, and these three to the right, of course, we didn't have those, this was the furthest one right. So on the close of this day, we got this to say this is a market that is extremely oversold on a rolling daily basis. This is a market that needs to pause and correct at least for a few days, if not a bit longer. And you can see immediately the next day, we have this candle. So when I say to you about the extreme overbought reading in euro dollar on a weekly and on a daily rolling daily basis, picture this not just, over the next few days, but potentially the next few weeks, because that is exactly what the quantitative data is saying is likely to happen in euro dollar, but to the upside instead of the downside. So zooming in on crude oil, I can only be short or do nothing this week. I cannot buy crude oil. You can see we had the spike up, we pulled back, and if you notice, back where we just looked at the sentiment readings on a rolling daily basis, they were still oversold. It wasn't extremely oversold, but the readings went from extremely oversold on a rolling daily basis to oversold. So the dark red to the light red. And so that tells me that this is in an ABC correction. This has not yet pulled back enough or corrected enough to start the next leg down. That comes when those bars go back to gray. They turn gray, they turn neutral. So that tells me that we're still likely to see this push higher, maybe taking out these highs, but very likely pulling all the way back and trading into the sell zone between these two levels. So if I can only be short or do nothing, what I want to see next week is crude oil push back, trade into the sell zone, and potentially even test the underside of the major descending triangle, which sits at 67.81. This is going to be a place next week that I'm going to start to look. I'm going to start to look to see if buyers start to struggle. I like to see momentum starting to fade, and then that's where I'm going to be looking for a 1 or 2 day liquidation, because as buyers get into these zones and they start to struggle, or to the downside sellers, they pull their positions and it creates a liquidation, and usually for 1 or 2 days. And I'm looking to capture, every time I take a trade, 1 to 2 days worth of expected move. So that's what I'm going to be looking at primarily next week. I wouldn't trade this intra-week because, as we've just seen, it's still oversold on a rolling daily basis. So you could get in short and this thing could snap back during the week. So that's really the primary setup I'd be looking for. If it blasts all the way through and takes out the 69.43, it becomes extremely overbought on the week, and that's intra-week, so you can think of it as the weekly candle. And therefore, this would be the second place I can, if I want, pull the trigger on a short. The only problem with this is it's above the descending triangle low. So I'd much rather the descending triangle low holds and we start to get a sell-off down in this area. But above the 69.43, the odds of a reversal actually go up. So I can look at potentially pulling the trigger on a position or a second position if I wish. Okay, so kicking off the Forex universe with the Swiss franc pairs. Now I can only be short Aussie franc or do nothing. I cannot buy this market. Something to note is the move up in the Swiss franc was so strong last week, I would be very careful about shorting this stuff intra-week, because the risk is for a snapback, because a number of these markets, Aussie franc, pound franc, New Zealand franc, that we're going to look at are also extremely oversold on a rolling daily basis. So I'd like to see Aussie franc come back, take out the upper bound, enter the sell zone next week, and then immediately I look to the left. Do we have prior broken support turning resistance? Do we have even better prior resistance? Why better? Because this is a price point which previously the market tested and sold off. Right, here's another price point. If you have broken support turning resistance, it's still good. Arguably, if you're looking at this as broken support, you have a bounce and then it sells off. So this is previously a place where the market actually bounced. Yes, we're looking for it to reverse, but it actually bounced. But a prior resistance area where the market sold off, even better. So if we do push through and test this high specifically, this is where I'm going to begin to look to see if buyers are attempting to break out above this high. And does this form an A, B, C? So we start to see buyers struggling, pulling their position, and that gives us the 1 or 2 day liquidation back inside the range. So these markets can go more, but my personal objective every single week is to capture 1 or 2 days. So that's the setup I'll be looking at in real time with GMT members next week. Next is pound franc, again, extremely oversold on a rolling daily basis. So this has to pull back, this has to snap back. And bear in mind, these markets are very volatile. So you want to be careful, if you're getting involved in shorting something, even though it's in line with this kind of downtrend, you do want to make sure that the buyers are running out of steam. Because, if this market pushes higher, it can push higher, with speed. So if we start to enter into the sell zone at the 1.08516, I look left, there's nothing here. There's nothing but air between this level and this level. Why? Because the markets are so volatile. So that tells me I would not be surprised to see this market pulling all the way back to the second upper bound and taking out this high. If it does that, and again, in this area, I will still look to see, if double tops are forming, head and shoulders on lower time frames for a reversal. But if this is just momentum all the way through, and then we hit this high, this would become a great opportunity to start to look for a 1 or 2 day reversal. Again, I'm filtering out intra-week shorts in these because of how extended they are to the downside. If you get involved with a short intra-week, this thing can snap back in your face pretty strongly. So I would rather wait for the pullback first. And the final franc pair is New Zealand franc. Now again, it looks like we have this kind of A, B, C. So an inverse head and shoulders, but inverse head and shoulders which fail turn into ABCs. So again, you know, this is why you have to have portfolio selection, because is this a third wave to the upside, or is this going to fail and be an A, B, and a C? Well, if everything is pointing in this direction, then you want to be, you know, looking at an ABC. If the overall trend was doing this, and then it pulled back, you know, and this was a low and this was a higher low, then you would want to look at that, you know, as a third wave break back to new highs, you know, and a continuation of the trend. So based on the portfolio selection going into next week, what I'd like to see is I'd like to see this pull all the way back, enter the sell zone. And again, this high right here is really, really nice. We've tested it once over here and we've sold off. If it starts to break through, and it doesn't have to, you know, test it exactly to the pip. I mean, this could very easily push through, break the high like this, attempt to hold above it, and then when that fails, that's where you get the liquidation, because all the buyers pull their positions. So that's what I'm going to be looking at next week. Again, I'd filter out any intra-week stuff just because these are so oversold already. You know, these markets are really volatile. This could easily come back up to the second upper bound just on volatility without a catalyst. Usually you need a catalyst, but this could do this purely on volatility next week. So if you are dropping down, you're starting to look for those setups. You really want to make sure that you're getting those top quality setups, double tops, you know, inverse head and shoulders or head and shoulders, depending on which way you're trading. Okay, so moving on to the euro pairs, started with EurUsd because the Aussie is my favorite short heading into next week. What I'd like to see here is I'd like to see the market pull back. Again, it looks like we're set for a potential ABC. And right down here, I bought this last week, sent it out to members in real time. We had an amazing snapback right before, I think it was CPI. And then actually after CPI even continued going. So if we come down, we take out this low. Not only do we take out this low for a potential A, B, and a C, so looking for sellers to start to break through, you know, perhaps even retest it on the underside and then kind of struggle into the buy zone. That's where I'm going to be looking for that liquidation back inside. Just as we did last week, we went down below the first lower bound and then we got the liquidation back inside. We paused and we actually got a second rally and second liquidation. Again, trading this intra-week may be a little bit more difficult. It's a little bit overbought still. It needs to pause and correct. If it just goes sideways for a couple of days, then maybe, you know, into kind of Wednesday, Thursday, Friday, you could look at intra-week. But the problem you've got with that is we have the ECB on Thursday. So with the euro pairs, I really want to be in these and out of them before Thursday. Let the ECB take place and then maybe reassess them on Friday or the following week. So that's the primary opportunity I'm looking at to the upside in EurAussie should we get it next week. Next is Euro Pound. This is a market that is extremely overbought quantitatively. Think of Euro Dollar on a rolling daily basis. So if you step in and short this intra-week, the risk is that this snaps back. I would not be surprised at all to see this snapping back early, entering into the buy zone, and there is this low right here. This would be a great place to start to look for buyers to attempt to go through. This would be a great place to start to look for sellers to attempt to break through. And this is the support level primarily, because I don't see anything else here. If we start to come down to the second lower bound, you know, we do have a price stair step high. But primarily this would be the area in the buy zone I'd be looking at. Do sellers next week attempt to break through this low? And if they do they struggle? That is the setup I'll be looking for, because if they fail, you're going to get that 1 or 2 day liquidation back inside the range. And just remember, the euro pairs are unlikely, although we saw it, I think, on the last meeting for the first time that I can remember. We saw those big moves before the ECB, but most likely these markets are going to hold their ranges and lack direction going into the ECB. So any kind of test of buy zones or sell zones in euro pairs before the ECB has a good chance of kind of holding and fading before the ECB takes place on Thursday. So I do like the euro pairs heading into next week. This is what I'm going to be specifically looking for in euro pound. Next is Euro New Zealand. Again, I can either be long or do nothing. I cannot short this market. What I like about this is we have a prior low here, but it's a little bit high, you know, for the buy zone. I really want to see this enter the buy zone first, because that's where the odds really turn for a snapback. And once we enter this buy zone, you can see there's multiple highs over here. Here's a high, here's a high. So we've got this kind of stair step. And yes, it would be pushing through this a little bit, but you could easily make the case, you know, this is a much bigger kind of high. And so any kind of push through on the 4 hours is just essentially volatility. So if we push into and below the 1.91096, this is going to be a great place next week to start to look again for sellers to struggle and to pull their positions, especially before the ECB. Because think about this. Let's say some people get involved in this and it's a short. Not me, because I can only buy this market. I cannot short it under any circumstance. So, but some people, you know, they may get involved in a short and it ends up down below the 1.91096, okay? So you've shorted this somewhere in the middle of the week. And again, I'm not suggesting you do that, but somebody's, you know, people will do that. And if they're correct and they get this down into the lower bound or below the lower bound, put yourself in their position. They've shorted this somewhere in this area and it's down below here. And now you've got the ECB coming up, you know, let's say tomorrow, let's say it's Wednesday. These people are probably going to want to book their profits because ahead of the ECB, they're going to be thinking, look, I'm sitting on profits. And, you know, if the ECB come out and disappoints more and they don't cut rates, this thing could just fly higher. And this could just completely see all of my profits to the short side evaporate. They book their profits, they exit their positions, and what happens? You get that liquidation. It comes back inside the range. So that's what I'll be looking for in Euro New Zealand next week. The final thing here is if we end up below the 1.87261, this is the second place. Let's say we get, you know, an interest rate cut out of the ECB. It goes straight through this level and it doesn't even look back. You just see momentum. There's no reversal patterns, no bullish reversal patterns, and then it takes out the second one. And then below the second one, you start to see momentum fading, and then you get the reversal. So below here, the 1.87261, this would be the second place I could look for a long opportunity. But is it going to hit that before the ECB on Thursday? Possible because of the market volatility, but probably unlikely. Okay, so wrapping up the Forex pairs with the yen pairs. Now, the yen pairs are not as overextended, so you could start to look at these intra-week, but I'd give it a couple of days, at least wait for some kind of a pullback. What I'd like to see primarily is, I would like to see the market pulling back, breaching the 92.72. This is where we enter the sell zone. We become overbought during the week. And then I'm going to look left. Well, there's a high over here, and this high actually is formed on these prior lows. So this would be a really good place in the sell zone next week to start to look for a breach, look for buyers to push through this level or attempt to push through and struggle. And when they start to fail, that is the opportunity, and the failure usually results, you know, in some kind of a reversal pattern. And when they start to fail, this is where you get your 1 or 2 day liquidation back inside the range. If we end up above the 95.17, for whatever reason, we become extremely overbought during the week. It's the second place I can, if I wish, pull the trigger on a short. And the third and final thing, because these markets are not as extended, you could look for this to move higher. Get close to it. Again, I'd leave it a couple of days, but you know, maybe it turns here. Maybe it bounces at these lows. And if it does and breaks back through the moving average with momentum, the moving average follows it. And very often that first pullback into the moving average, that gives you your bear flag setup, in this case, down to the sell zone at the 87.81. Great profit taking target next week in any Aussie yen shorts. Next is pound yen. I can either be short or do nothing. Buying this market is not an option for me. We have quite a strong up move. So again, it looks like we're going to get at least an A, B, and a C retest of this high. What I want to see is I want to see it primarily push all the way through and enter the sell zone. Now on the left, we don't really have any resistance until here. It's quite deep. You know, usually I like to look for things in the bottom half. But we do have a previous support level here and down here. So this would be a great place to start to look for price to come back, enter the sell zone above the 191.37. So I'm not necessarily looking exactly on this level to short it. I'm looking for it to enter the sell zone, to start to push through it, and then run into, in this case, resistance. This is why I'm going to be looking next week for a 1 or 2 day liquidation to the downside. If it blasts all the way through for whatever reason, whether I'm short already or not, the second place I can pull the trigger on a short is above the 194.95. And the third and final thing is, you know, we come back, we push up, maybe we ABC at this high, and then we start to struggle maybe here and we get what's called a fast market. It breaks back down below the moving average with momentum, and very often the break and that first kind of pullback, this actually breaks above it. A lot of them are a lot cleaner than this, so it breaks through, you know, pulls back, hugs it, and then moves away. But that first pullback into the moving average, as the moving average follows it, you get that bear flag set up into the lower bound and also the prior low. This would be a good profit taking target next week at the 184.20 in pound yen. And the final yen pair before we move on to gold and silver is New Zealand yen. Again, I can either be short or do nothing. I would like to see this pulling all the way back, if possible, above the 85.81. And a lot of weeks, you know, these markets test the buy and sell zones. Breaches it, and there is a nice high over here. So if we did come back and test this, you know, this would be the first high to the left-hand side. So we enter the sell zone, I'm looking left. if we can come all the way through, and because the market is quite volatile, this is definitely, possible. We test this high and we start to struggle. You start to see buyers fading. You get the reversal pattern on lower time frames. So not in the 4 hours, these reversal patterns very often happen on 5 minutes, maybe 1 minute, even lower. So these are the kind of setups that I'm going to be looking at specifically next week. If we end up, for whatever reason, I don't anticipate this happening, but if we do breach the 88.01, we become extremely overbought during the week. So just as on a rolling daily basis, we become extremely overbought on a multiple weekly horizon, on a single weekly time frame, we become extremely overbought above the 88.01. It is therefore the second place I can pull the trigger on a short if I so wish, whether I'm short already or not. And the third and final thing is, again, maybe we pull back, we start to test some of these lows and we don't make it to the upper bound because the yen pairs are not as extended to the downside. You could look at the breakout intra-week down below the moving average, it follows it, and that first pullback into the moving average, move away. In this case, profit taking target to the downside would be the 81.40. Okay, so wrapping up the video with gold and silver. Now, I want to use gold and silver reactively next week, especially if we're going to get a stronger dollar. It means that I would rather be a buyer in gold, given the opportunity, and a seller in silver, because gold and the dollar can go up at the same time. Silver is going to tend to struggle. So on the short side, I'd rather short silver. I don't really want to buy it. And on the long side, if I'm going to buy either of them, it would be gold, because that can go up even if the dollar starts to bottom near term and go up as well. So going into next week, any pullback in gold, what I'd like to see is, again, I wouldn't want to buy this intra-week because it's a bit overbought on a rolling daily basis, but I'd like to see this pullback ideally breach the 313687, and below this level is where I would begin to look for a 1 or 2 day reversal to the upside. There doesn't seem to be any support here because of how strong this move is. So I would look for price itself to start to form its own lows. In other words, it enters the buy zone and it starts to do something like this, because there's nothing on the left-hand side. It starts to come down, test the low, test the low like this, and then looking for that liquidation to the upside for 1 or 2 days. Maybe if it goes sideways for a few days, if it kind of goes sideways and pauses, later on in the week, you may get the opportunity for the re-break above the moving average and then the intra-week bull flag in this case. But straight out of the gate on Monday, I would let this breathe. I'd let this pause first, and let it settle because it is a little bit overbought. If we end up down below the 3035.55, I don't expect this to happen, but it is the second place I can pull the trigger on a long opportunity and start to look for bullish reversal patterns, because that's where gold becomes extremely oversold during the week. And finally, we have silver. Now, silver is swinging wildly with the market volatility. So if you are going to get involved in some of the commodities like gold and especially silver, you might want to adjust for that in your position sizing, right? So if you're going to have very volatile moves, it's easier to stomach that if you take small size. I personally only want to be looking for short, so I want to see silver come all the way up, breach the 33.85 and start to take out these highs. This is where I'm going to begin to look for silver to reverse. And at the same time, what would be good is if we start to get this move, I would be looking at the US dollar, because the US dollar, it looks like we might have one more move down, and then that's where we start to form the bottom, or a double bottom, and euro dollar, inversely would be a test of the high and then start to double top. If that's the case, we can get silver pushing in here, and as the dollar starts to reverse, this would be a good tool to use to time any kind of short from above the upper bound in silver. If we end up above the 35.40, I can look for a second short if I so wish, whether I'm short already or not from down here. And the third and final thing is, you could look for this intra-week, but look for the dollar to start breaking out if you want to time this intra-week. So it starts to push higher, and then what happens is you see the big reversal coming back in the dollar, euro dollar, maybe it double topped and tanks, and this doesn't get all the way up there. And instead of testing the upper bound, you see the reversal intra-week, right? The moving average follows it, pulls back into it, and you get that bear flag set up into the profit taking zone in silver at 30.74. I think there are better markets to trade next week. I definitely prefer the Forex market setups, but if you are looking at silver, those are the setups I would primarily be looking for next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.